Bill, we saw a revision downward in GDP, almost a full percentage point. What's driving this gloomy picture that you painted from business economists?
Yeah, the 52 panelists that participated in the most recent survey, which was conducted around the middle of August, have stepped down their outlook both for this year as well as for 2012 by roughly a full percentage point. I think a couple of things have factored into that. In part, it's the very significant downward revision that we have seen with regard to the GDP historical data, which occurred at the end of July. On top of that, taking place right around the time period with all of the debt ceiling issues, I think that gave people a little bit more of a dismal view with regard to the outlook. So we're looking at growth this year about 1.7%, next year about 2.3%.
I was looking through the survey, and two key themes that kept coming up: confidence and unemployment. Those are the risks, those are the concerns.
Yeah, there's certainly, when you look at what is holding back on this recovery, both business as well as consumer confidence ranked as the top issue, followed by the issues surrounding some of the fiscal policies and perhaps monetary policy. It was just basically economic policy concerns. On top of that, the very tepid housing market was also the number 3 ranked issue.
When you see economists on Wall Street, in the academic world, saying there's a 50+% chance of recession, do you agree with that?
Well, certainly our panelists do not. They had it very relatively low percentage are expecting another recession, but nonetheless, with these kind of growth rates, they're not looking at spectacular growth by any means, and this is going to be a real challenge for our labor markets.
And you come to us from Chicago. It's the heart of the nation's manufacturing. It was the bright spot in this economic recovery, and then what happened?
Well, I think it's still, all in all, holding in there. I think we had a couple of factors. Certainly, the energy spike that we saw earlier this year following all of the instability in the Middle East that caused a cost shock to that sector. And then on top of that, we had the Japanese disaster on March 11th with the earthquake and tsunami, and that really affected the supply chains, especially for automotive. In fact, things have come back a bit better, and there still seems to be cautionary optimism with regard to the performance of the manufacturing sector going forward. Although I would say from our panelist standpoint, they are absolutely seeing a much better performance relative to the nation for manufacturing, where they see growth both this year and next year around 3%, and that's better than what they see for GDP in general.
So the manufacturing remains a bright spot for these businesses.
Right.
How are they going to get to hire again?
Well, that's going to be the challenge. With the kind of growth forecast that we're looking at for the overall economy, subpar growth this year, perhaps around trend growth next year, that is not going to be growth that is going to be rapid enough to really materially bring down the unemployment rate. So in fact, they have upped where they view unemployment rate by the end of next year to 8.5%. Back in May, they thought maybe 8%. So this is a far more dismal view with regard.
We just keep lowering our expectations.
Well, it's part of this, all of the issues that is weighing. The top 4 issues that they see going forward over the next 5 years that they're very concerned about are high unemployment rates, federal debt issues here in the United States. It's not just us, though. They also see the sovereign debt issues that, of course, are making news quite significantly in Europe. And then the 4th issue is increased regulations.
And very quickly, Bill, could the sovereign debt crisis in Europe be the killer of the U.S. economic recovery?
Well, it certainly poses a risk for us. With the global tie-ins that we see, we're very much integrated. So we have to watch that very closely when it comes to how our economy performs.
Biggest risk, would you say?
Certainly, with regard to the biggest concern are these debt issues, both in the U.S. and outside.
All right, Margaret, there you heard Bill Strauss, who is the senior economist at the Federal Reserve Bank of Chicago, and he's speaking on behalf of the NABE, which